Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Are you a new or sophisticated investor wanting to learn how to operate a successful syndication business? For life-changing training from the nation's leading syndication expert, my friend Vinny Chopra has the training you need. Text LEARN, L-E-A-R-N, to 474747. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Nichole Stohler. Thanks for being on the show, Nichole.
I'm so excited to be here. Thanks, Whitney.
Yeah, we're honored to have you on. And I'm really looking forward to this topic today. I was just telling Nichole, we haven't talked about this subject, I don't know, no more than once or twice since we've started the podcast. And so this is going to be really good. And I'm going to wait to tell the listeners what it is. So, but Nichole is the founder and host of the Richer Geek Podcast. She helps IT and other high-income professionals find creative ways to build wealth and financial freedom. While working full-time in technology, Nichole and her husband have built a real estate investment firm with an impressive portfolio that has included hotel, multifamily, and single-family residential properties. Nichole believes that it is not only possible, but essential that others in high-income roles find ways to make their money work for them, and she's here to share some of her proven techniques for doing just that. So, Nichole, thank you so much, for your time today and being on the show. And we're really looking forward to getting into this today. But, tell the listeners a little about who you are, where you're located, and let's jump in.
I am in Scottsdale, Arizona, and I love being in this particular area of the country. And it's interesting because when we talk about real estate investing, we always invest locally in our market where we have a pretty good handle on what is going on. I also work full-time in IT, in tech, and my heart is with people who work in tech. I absolutely understand the jobs are very demanding, things go wrong on weekends, evenings, and so these are intense types of jobs, and I get that. And when I talk about finding ways to make your money work for you, I understand that it's hard when you're working full-time, and there are some strategies you can employ around those.
Nice. So, y'all are, we had talked about it a little bit, but you're working full time while also managing this business, and y'all and performing very well and doing numerous things, numerous types of asset classes. And can you elaborate on how you started the syndication business, how you got this rolling, and how you've managed all this time? Because personally, I've done the same thing, and I know a lot of people listening are trying to get there, and they're trying to manage their time. How have you done that while working full time?
It's a great question. I would note that we're in our first syndication right now, and that's after many years of investing completely with our own capital, growing, seeing the successes there. So we have a background, a lot of experience. My husband's been in property management. So having that foundation to then take the next level and then become a syndicator. The way that we balance it, my husband and our team, and when I say team, we're talking about our attorneys, our CPAs. We have consultants who has kind of 20 years hotel operations experience. So that particular team of people are working on this more in the full-time capacity. My role is marketing. I also really enjoy the opportunities that you have to leverage marketing as it relates to the hotel, how you can increase sales and increase income. So I have a big part in that, but I'm not really the day-to-day operations. I'm not on the calls with the attorneys, those types of things. So that's how I balance it.
Yeah. So it sounds like you've educated yourself one way or another. You've educated yourself, you invested passively, and you've learned all these things. And then also you built a team, right? You built a team, and, obviously your husband plays a big role there too, but so, your education and you built a great team. But then what I would love to dive into is this hotel business and how that works. And so I know nothing about the hotel business, but I know numerous people who have invested passively in hotels, and different things, but I'd love for you to just elaborate on why you all have selected, the hotels as the asset class for you, as opposed to, strictly saying multifamily or staying with single family even.
it's a great question because we did get our start really in multifamily. My husband was managing large 300, 600 unit apartment complexes. And that is really the place that we come from, that we understand very well. The way that we got into the hotel industry was kind of twofold. I talked about the fact that we keep everything local to Phoenix. For us, our network of people are here. The referrals that we have for the best attorneys, CPAs, folks that know different niche areas within industry are all within the Phoenix metro area. And we were actually introduced to someone who's been in hotels for 20 years by one of our brokers about 2 years prior to buying our first hotel. And we were starting to explore that as an alternative niche already. And then about 2 years later, we received an unsolicited offer for one of our apartment complexes, which we finally ended up taking. Then we were under 1031 exchange, and we could not find multifamily that met our criteria, that provided the returns that we expect, the cap rates, et cetera, not in the Phoenix metro area. And that is when we pivoted into hotels. And I think part of the reason that we had the confidence to do that is we did have basically a hotel mentor, someone that was able to find off-market property, someone who's able to say, hey, here's the value, and really teach my husband as we went along, and then bring the resources and recommendations, again, in market for us to be confident and successful with that hotel.
Nice. I think you really hit the nail on the head there. I mean, you had a mentor, you had somebody that had been there, done that, that gave you confidence, right? I mean, it gave you the confidence to understand this type of asset class or business and going into that. So, can you, what are some things we should be thinking about, as opposed to say, most of us are probably thinking multifamily. I know a lot of listeners are in retail and in mobile home parks as well. But as far as, going from multifamily to hotels, what are some of the things we should be thinking about, even when underwriting or just that different asset class? Hotels not my specialty at all. So, could you elaborate on that?
Yes. To start with, the same thing that holds true in any real estate niche location becomes still your number one priority. It's interesting because when you're buying a hotel, and I'm talking about hotels that are what's called a flag hotel, franchised hotels, limited service, catering to business travelers, that's really the space that we're in. And you are 100% looking first for location. Then you will observe the flag itself, the brand, but we are not buying because it's a specific brand. We're buying because there's economic centers, there's development going in, there's a lot of reasons to be in that particular space. So that is really the same as multifamily, where you're looking at location first. Some of the things that are different is that hotels, depending on your market, have seasonality. So you do not have a consistent, steady occupancy rate that you would see, for example, in multifamily once you've been able to get the property to the level that you expected. So you will definitely see seasonality. In Arizona, our off season is during the summer. So those are challenging months. And it's similar to if you were to talk to someone who owns long-term rentals versus someone who owns short-term rentals. They have seasonality as well, but the profitability can be much higher on the short-term rentals. And similar to hotels, the profitability on a per unit, and I'm going to say that in the hotel industry, it's called key. So a room, how many keys do you have versus units or different, rooms itself, you actually use keys. So on the per key basis, the profitability is higher than apartment complexes, but you do have variables that you wouldn't see necessarily in the multifamily space. You also have more levers in a hotel. So it is more of a business than it is real estate, but you do buy for real estate first. Then you're looking at the business components. And some of the things are similar. You may have property management for your multifamily. In our case, we have a general manager, and there's levels of companies that'll provide kind of operations management, accounting, those kinds of things specific to the hotel industry. You would also have maybe you are buying some supplies in your multifamily, like cleaning and for your pool and those types of things. We have the same thing, only our supplies are on a much higher basis, right? The cleaning's happening every single day. The pool needs, that's happening all of the time. So those pieces are different. There's generally a free breakfast. So there's all these incremental business component pieces that you can start to take a look at to say, okay, can I negotiate better contracts? Can I, leverage volume discounts? So you can start to look at that because you're either part of a franchise or you have other hotels. The other pieces that you can do is just monetizing the hotel itself. What can you do, for example, with spaces? Like our breakfast area is only used for breakfast and then it sits there the rest of the day. So that could be used as a conference space for small groups. How can you be adding snacks and mini bars and things there's a lot of different ways to monetize the hotel. Negotiating corporate contracts, selling digital space on your Wi-Fi splash page. So what I love is that there's so many of these, and it's almost like the sky is the limit in the things that you can do within that specific hotel space.
Wow. So yeah, it's neat though. You were talking about how it's more, you're thinking more business wise. I mean, real estate's still a business, but I don't know. It seems very different, but you have so many other levers there, like you talked about, that I haven't thought of before. Just like that space that, you see everybody having breakfast there in the morning, but then the rest of the day it's just empty.
Exactly.
Right? What else could you use that for? And just all these little things, even selling the digital space, you talked about that. That's very interesting, and all these different things. And so you're really you're getting very creative, right? I mean, you are exhausting all these avenues to increase the income, obviously the value. And so as far as this, this seasonality, and it's something you think about it, but, think about how much it affects that asset class. And so, location is going to affect the seasonality as well, right? I mean, depending on where at in the country and hot, cold, all those things. And, you said in the summer times, your slow season, where a lot of times, if you were in Florida, that's probably the busy time, right? Or no, that may be the opposite as well. Or let's say up north, or in, in a colder climate, the summer is probably going to be a busier time, or depending on what their attractions are. But what are some other things that we should be thinking about if I'm looking at, moving into the hotel space, or, how am I going to find that hotel? How are you all finding hotels that you're looking at acquiring, and what does that process look like?
We're finding hotels because of our network of people and being local to the Phoenix area. And I emphasize that a lot. My husband and I are active in Rotary. I'm regularly reading the Phoenix Business Journal. Keeping an eye on what's happening in our market is how we're able to determine not only just, okay, we're looking at a property, but what do we see that's up and coming? And what are we aware of that maybe the current owner isn't paying attention to? So I will tell you this hotel that we're currently under contract, the owner is kind of a mom and pop, had a smaller rural property, sold it 1031 into this particular property, which is now in Metro Phoenix. And the approach that the current owner is taking they're not understanding a lot of things. For example, they let their corporate contracts expire. They didn't really see the need to that. I see that they don't respond to reviews online. When you think about a hotel industry, it's very much of a relationship business. Those corporate contracts are going to be key. Your relationship with your guests, there's a customer support aspect of it, customer engagement. So there's a few things like that we look for. So we saw this hotel opportunity and we said it is undervalued because of a number of factors. Not to get too deep into the weeds, but one of the things also is that you may be under a particular flag when you first buy a property, and then as that contract comes up, you may decide to switch brands. This owner decided to switch brands and did that in the middle of the busy season in Arizona. So if you think about it, construction in the lobby, remodeling going on in a hotel, it's not very conducive for people coming to visit. So it starts to hurt revenue. There's a time to do that and a time not to do that. So he did it during the wrong time. which is the busy season, and that impacted his revenue. So then we were able to look at that and say, okay, well, obviously that's not going to be happening again. We see a revenue growth. We understand what the base is here. These corporate contracts have gone away. We see that there's not the customer engagement. And those are all things that we looked and said, okay, we can improve upon that. These are some very basic things that we can do, not even out there crazy, just having business fundamentals and understanding the market.
Nice. So yeah, so you are in depth in this market. You're in the clubs. And I noticed you said you all are buying locally. Do you all plan to buy outside your market as well, or do you plan to just stay focused right there?
Right now, we plan to stay focused here. Part of it is we just have such a great network of people. So we get leads about potential off-market hotels, and it's easier to leverage. For example, general manager can cover 2 hotels, right? So you can start to get those economies of scale if you stay within market.
Okay. And what are some flags that, when we're looking at hotels that are going to show that there's a value there to be had? I know we've covered some of them, but anything else when you're looking at lots of opportunities, what are some things? Oh, wait a minute. This one, you noticed that he rebranded during the busy season, but what are some other things that, you're looking through all these opportunities to pick one out that says, wait a minute, we should look further into this hotel opportunity because it looks like there could be some more value there.
Well, we always look at expenses, and we always understand. We know about where they should be. This is actually one thing too that's very interesting. There's a ton of data as a franchise owner. There's a ton of data that you receive that benchmarks your hotel against other hotels, and you can take action on those KPIs and really make an impact as a result. So one of the things that we already had that experience. We know what things look like, so we're able to look at, okay, when we're in our due diligence period, what do those expenses look like, and how can we decrease those? And then, of course, all the marketing pieces we're looking for that aren't happening that we know we could go after. The other thing that's interesting about this particular hotel that's under contract is I don't think the current owner really is aware of kind of what's happening in the Phoenix metro area. This hotel is going to be right at a drop-off point where another highway is in construction right now and going to hit right in kind of that intersection area of already another major highway, and as it loops around the Phoenix metro area, there's a ton of commercial development that's then taking place along that line, and developers buying up the land. So if you look at that, you say the land alone is going to be highly valuable without even just thinking about the hotel itself. It's just back to kind of the number one thing, which is location and what's happening in market.
Nice. And so when should we think about having to rebrand a property? I know you mentioned, this other seller that of, completed that process at the wrong time, but when do you think about having to rebrand?
Well, one reason may be that the brand itself decides that they have a new standard and your hotel doesn't meet that standard. So let's give an example. One of our hotels had been rebranded about 2 years before we bought it. And the reason was it had exterior rooms. So it's, multi-story, but the rooms they're not enclosed hallways. And the brand at that time, which I think was a Best Western, said, we don't want any other hotels that have exterior rooms, at least not within this class of hotel. Actually, let me just take a moment to explain that there are, just like in multifamily A, B, C, Class D class properties, similar thing in hotels, only they would be like extended stay, budget hotels, limited service hotels, upper limited service, getting into your high end, of course, your boutique. So there are a ton of different classes, and a major brand of hotel like a Best Western or a Marriott has hotels in all of those different classes. So, and then they may change how they want to position the class in the market. For example, I know that La Quinta is doing quite a bit to kind of raise the level of service and quality of that their hotel, which in the past maybe that wasn't the case. So Best Western at this point said, hey, we don't want to have those exterior exterior hallways anymore. So we're not going to continue with your contract. And at that point in time, as an owner, you would be seeking out what would be alternative options. And that can happen on the hotel brand side. And then as an owner too, when your contract comes up, you can make that decision. But everything is a cost analysis. If you're switching brands, you may have certain requirements that you have to meet, and your hotel may not have those already. So there's some investment there. So kind of a trade-off either way.
So I guess thinking through having our own brand as opposed to branding under, another large brand, is that a possibility or something you think through?
Yes, you can take your hotel, it would be taking it independent, or you could already have an independent hotel and then take it to a brand. So then the question becomes, okay, why would you be under a brand? The biggest reason is really marketing and loyalty programs. If you look at your corporate traveler, they will tend to be loyal because they will get points per stay, and then from there they can maybe take a free weekend with their family. Loyalty is a huge driver for bookings in the hotel itself. The other piece is standards. People know what they're going to get if they consider it's a comfort inn. They know what to expect from that particular hotel. And a lot of times they'll choose that versus an independent that they don't have any idea what they're dealing with. And I think the biggest thing is because we're in limited service, we're catering to business travelers. A lot of times those are corporate contracts negotiated. It's rare that you would see an independent hotel on a corporate travel booking type of site.
Okay, so that's some good stuff to think about. But what about returns for an investor? What type of returns do y'all normally see, or how's that structured?
Well, okay, so we're in our first syndication right now. I would say that when we switched from multifamily, we were seeing at that point in time in Phoenix cap rates around 4 to 5%, and we moved into the hotel because we were seeing 10%. So, and we still see that today in today's market. I will say all assets are higher. At a higher entry level than they used to be, 3 years ago or even a year ago. But we're still seeing the cap rates that we expect, even despite the fact that you've got the seasonality and the trending. And again, I would equate it to, for those just kind of thinking about a long-term rental versus an Airbnb. There's more work on an Airbnb or a short-term rental. Obviously, you've got daily cleaning, you've got communication, you've got follow-up with your guests, all of that, but there's more revenue. It's very similar to multifamily and hotels.
Nice. Okay. So, what about a buying criteria? Like when you go to look for a hotel, what are some things, or is there, how do you judge or like occupancy and things like that, in a hotel, and how do you, tell the broker, well, these are the types of hotels that I'm looking for?
Well, first of all, we do try to stay in limited service. The reason is when you add food and beverage, that's a chargeable item from the standpoint of a restaurant. Not like a mini bar or a little snack shop, but I'm talking about server, restaurant, those types of things. That increases your expenses tremendously, and it doesn't always give you the return. Now, on the flip side, it can be a draw to that hotel because it has a restaurant, but we just find limited service has less moving parts, and so we prefer that model in itself. In the hotel industry, people will talk about things like revenue per available room. It's called RevPAR. They'll also talk about the ADR, the average daily rate. Those are interesting metrics to benchmark against other hotels, but it really isn't a full picture. What you really want to see is the overall gross operating profit per room. And in that case, now you're looking at those other add-on services that I mentioned. And those revenue numbers will vary based on seasonality and where you are. So really, we're looking for upside opportunity, a hotel that has, again, a good location, that has a foundation we can build on. And those are the main things that we're looking for. I will say when we're underwriting, we're looking to actually to determine if this is the right hotel to buy, besides all those other factors, especially because we've been on a very long economic run. One of the things that we look at is, okay, if we were to go back to 2010, which was really one of the worst years in the hospitality industry for tourism and travel and even business travel, right? All of that was really down. What was that revenue or that average booking, and what was the consistent occupancy within the hotel during that time frame? And can we still make money if we're at that again? So it's kind of like the same thing you would do if you're looking at multifamily, and if suddenly rents decreased, what was the worst performing? Can you still make money on that property if you had such decreases?
Some great advice right there. I mean, thinking about, okay, if we experience another 2010 in the hospitality market, what's going to happen to this property? What's our income going to be? And are there some specific guidelines you would use there for, percentages or income or occupancy or things like that?
Yeah, so you would look at, let's just say it's a value upside opportunity and you're looking at the hotel. So just use the current numbers for the past 3 to 5 years and don't factor in any pro formas. Don't put in what you think you can do. Just be realistic baseline numbers. And then you come up with what is the average daily rate on a, annual basis, and take the worst one, whatever it is. If it's $50 a night, whatever it is, take the worst one. And then from there, look at the worst occupancy, which I think in 2010, kind of on a countrywide average, was about 54%. So if your occupancy is at 54%, can you still make money at that particular average daily rate? That will give you a good solid foundation, because everything is upside from there. And if you're good there, then you can be confident moving forward.
Nice. So taking a little turn here, a few more questions before we run out of time, Nichole, but what's been the hardest part of the syndication journey for you so far?
How long everything takes. We didn't expect that. So as an example, well, first of all, just to get the hotel under contract with the LOI and our lawyers evaluating the LOI, that in itself was about 1 month. From that point, the PPM paperwork, especially because we were trying to decide 506B or 506C, and we went with C, but that paperwork took some time. And then the other thing I didn't even mention that's very unique to hotels is that, of course, you're looking at a commercial loan, but you can also potentially leverage a small business loan. So if you're leveraging a small business loan, that has implications in how you structure your entities, because, for example, my husband and I are personally guaranteeing the loan. So we're actually getting the small business loan, but then you have this entity that has other investors. So just figuring that out took some time as well with our attorneys and our CPAs and the SBA guys. So I would say how long everything takes.
What's a way that you have recently improved your syndication business that we could apply to ours?
Wow. This is our first time, so let me think about that. What's a way?
Could be one key thing, or maybe some kind of technology, maybe that you all have implemented, or it could be a numerous thing. Any way that you all have, like, if you would say, okay, if you're in the syndication business, this is something you have to have.
Well, I think the piece that is pretty key is to be able to have, and this may be very basic, but to have a webinar and have a CRM system where you know who's attending and you can follow up with them, and then they have an opportunity to listen to it as a follow-up and a playback. I know that myself as a passive investor, I appreciate that, because I want to go back and kind of digest the information, and you can't always make the call, but also you just may need some more time to think it through. So I think that is probably a key technology component. And then the CRM is really critical, because just because someone attended and didn't invest at this point in time, they may in the future. And it would also be really helpful to understand, what was it about this particular deal that was not interesting to you? And you can find out a little bit about, where they're coming from and what might be more interesting for them in the future.
What technology are you planning to use for your webinars and things like that, or that you'd like to see like in the past that you've seen?
Well, we're going to use Zoom for our webinar. It's just easy. We're on a Zoom call now. It's not going to require a bunch of setup to get that piece ready. So we are using the official Zoom webinar platform, where we're sending invites and then people register, and then we're able to see who's actually signed up to attend. So I would say that's a pretty key technology. And then on the CRM and some of those pieces, we have already an email. We use ConvertKit, so we have an email provider solution, but we're also looking at some of the back end like IMS and some of those types of things for managing the investor ongoing communication and visibility into numbers.
What is your best advice, or like one thing for caring for investors?
I think communication is key. Let the investor tell you, hey, you don't need to keep me updated, but I can't imagine anyone who doesn't want to be updated on what's going on. I think the other thing is, we've had a lot of requests to go tour the hotel, right? Which is kind of cool. The challenge is, and just like in multifamily, when you're in the middle of buying, the employees don't know. So we can't actually have anyone go tour the hotel yet, but we will be having a grand opening where our investors can come and can see and take a tour. But it's kind of sad that we can't do that, but unfortunately not until the deal is closed.
What's the number one thing that's contributed to your success?
Hard work, I would say, and learning from mistakes. We've had our ups and downs, and there's things that we've learned. I'll give you one little tip. In the hotel industry, you need to be very cognizant of ADA rules. And we had an issue with one of our hotels where someone sued us for like a very tiny minor thing. And they call these drive-by suing type of things that people do, where they pull up, they look at your pool, and they say, oh, do you have a lift that I can get up and down? If you don't, then they want to sue you. And so it's kind of a sue happy type of thing. Well, and it wasn't the pool, but it was another situation. We have a lawyer who comes out, and he's an architect / lawyer, looks at everything, provides us a report, and tells us what we need to make sure that we're ADA compliant. So here we are buying this hotel now. Obviously you do your inspection and all of that, but we also paid $2,000 for this guy to come out and do the ADA inspection. So we know 100% of what we're looking at. And that's an example of just learning from a past experience.
Wow. See, I didn't know that. That's great advice. The drive-by suing, that's a new one. That's one we obviously need to be aware of. What is ADA?
The Americans with Disabilities. So basically yeah.
Okay. No, that's good to know. So Nichole, you've been a great guest. This has been a great show. Like I said, I haven't had, maybe one other guest talk about hotels maybe. And so I appreciate just you sharing your expertise and how you all moved into single family, multifamily, and now hotels. And while also, you're working full time, and you've given us lots of good content. And I know the listeners have learned a lot. So have I, but tell them how they can get in touch with you.
The best way is on my website, which is the Richer, RICHER, geek.com.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.